It seems like it's another use of the old playbook. How do you see it?
We're getting easing, but it's not quickly enough to keep up with the pace of deterioration in the broader economy. So interest rates coming down. We had a 15 basis point cut in the 5-year loan prime rate early at the beginning of the week. That's helpful on the margin for housing, but given the depths to which housing has sunk, we're going to need more. There are some efforts to try to guarantee credit for some of the stronger developers. That's also welcome, but again, probably going to need to be broadened. And as you mentioned, State Council noting a number of additional policy measures, including policy lending. So we're seeing policy easing. It's still behind in terms of the degree to which growth has slowed this year.
Andrew, I'm curious what you think, because most people that we talk to, I mean, virtually all, I'd even say, that they point to the zero COVID strategy as, I guess, number one economic culprit. And once China exits from that COVID zero strategy, do you think we're looking at an economy now that actually has too much stimulus?
Well, we think that easing of zero COVID strategy is probably a necessary, but not necessarily a sufficient condition to get back to higher levels of growth. It's clearly impairing consumer activity as well as some effectiveness of some of the stimulus in the system. We could see a significant rebound, at least in the short run, if those policies were eased. But other areas, notably property, are still probably in need of other forms of support, in particular, more surety about which developers, which projects will be going concerns going forward. And that's a little different than just the zero COVID issues. So while zero COVID is very important and a significant constraint in the economy, it's not the only issue that policymakers have to deal with.
Andrew, are you seeing any bright spots in the Chinese economy now?
Well, if you want to call it a bright spot, you can say that some of the challenges the economy is facing are a reflection of policy choices. And you mentioned zero COVID, of course, but also the desire to crack down on some of the excesses that had prevailed in the property sector in past years. So policy changes can also affect the outlook in those places going forward. But we've really had quite a lot of challenges in the near term. Clearly, the external side of the economy remains quite strong. So if you're looking for bright spots, you can say, well, China's running a gigantic trade surplus. But again, ultimately, that reflects in part the weakness in imports. So we do think more domestic policy easing and improved growth in domestic demand is going to be key as we get into 2023.